Hi, I'm Dennis from Accountants Desktop. This video will demonstrate our Professional Profit Workbook for 2024, which can be purchased by non-subscribers to our website as a standalone calculation. You can view any specific part of this video by using the links below to jump straight to that section. And just hit the pause button anytime you'd like to take a closer look at any screen. If you like this video, please give it the thumbs up below, and don't miss any of our future videos by clicking on the subscribe button. The ATO has been concerned about the allocation of profits in professional firms for a long time. Apart from the general anti-avoidance provisions and several rulings on the topic, they first published specific guidelines concerning the allocation of professional profits in 2015. But according to the ATO, those guidelines were misinterpreted, so they were suspended in 2017. Then, on 16 December 21, the ATO issued PCG 2021-4, which contains a risk rating system from low to medium to high based on figures extracted from the client's annual returns. If your client falls within the low risk category, ATO action is unlikely. Where a client is within the moderate risk zone, ATO action is likely, and in the worst of situations, the high-risk zone rating means the ATO action will be prioritised, and as a transitional measure, the old guidelines can still be relied upon up to as late as the 30th of June 24 in specific circumstances. For example, if risk was low under the suspended guidelines, but is higher under PCG 2021-4, the ATO will accept a low-risk assessment. You can see some quotes on the screen taken directly from the guidelines. The takeaway here is that the ATO will be monitoring your professional clients' returns each year and expects agents to do the same. They may call upon you to produce records to show your risk assessments, and any failure to do so may lead to an audit. Our Professional Profits Workbook is an Excel file which uses the methodology in PCG 2021-4 to assess the risk of ATO compliance activity in relation to your client's profit allocations. You download the file from our website and save it in your document management system with other client records for easy retrieval. It comes with a procedures checklist to ensure that your client is eligible to use the ATO guidelines and to help you carry out your assessment. With the 2024 file, you can do an actual assessment for that year, as well as project the risk for the following year. For example, where the risk may not be low in 2024, you may want to project profit allocations in 2025 to ensure that the client will be in the low risk zone for the following year. You can do an assessment for just one individual professional practitioner in a firm, or for any number, including all, in the same screen. It will do calculations for income tax, fringe benefits tax, and superannuation contributions tax to help with the calculation of effective tax rate for each practitioner. For guidance, the file also includes a sample assessment showing how to enter data for most situations. And you can copy suggested text explaining the guidelines and the client's risk rating and paste it into an outgoing email or letter to your client. Please note that this workbook cannot be used for the suspended guidelines. Let's take a look at the calculator. When you first open the file, you'll see this screen. On the left-hand side, there's a fixed pane containing links to all other parts of the worksheet, as well as a checklist to follow in doing the assessment. Below the checklist, you can see links to technical material about the guidelines on the ATO website. And on the right-hand side of this screen, there's some general information about the guidelines themselves. This next screen explains the process and how to use the different parts of the workbook. To be eligible to use these guidelines, the client's arrangements must satisfy the requirements of each of two gateways. This first gateway is the Commercial Rationale Gateway. You can see some information posted here from the ATO website, and there's a text box alongside where you can add any comments you'd like to make about your decision. This second gateway is the No High Risk Features Gateway, also with ATO information posted from their site, and a text box for comments alongside. This screen is the assessment part of the workbook for 2024. It's divided into three distinct parts. At the top of the screen, you calculate the total profit for risk assessment purposes. In the table below that, you enter each practitioner's details and the amount of their entitlement to the firm's profit just entered above. Further to the right in this table, you can see a summary of the risk assessment for each practitioner, along with their risk level. And the table at the bottom of the screen is where you enter specific allocations of profit by each practitioner to themselves and or their associates. This next screen is a work example for an accounting practice called Balanced Accounting Services Proprietary Limited. The practice has two partners, and each practitioner's family trust holds an equal number of shares in the practice entity. This is an example of doing an assessment for all partners in a practice. Alex is partner 1, and all figures are shown in purple. Sam is partner 2, and all figures are shown in green. At the first calculation block, you can see that the total profit for risk assessment purposes is made up of the practice profit, the grossed up fringe benefits amounts, being a car each for the two partners, deductible employer super contributions for each partner, and the profit from their service entity, which is owned equally by the spouses of the two practitioners. Then below that in the profit entitlement table, there are details about each partner's ownership in the practice, as well as their entitlement amount to the profit for risk assessment purposes, and a summary of the risk analysis, including the risk level. You can see that Alex is in the moderate risk zone, and Sam is in the low risk zone. And at the bottom of the screen, in the profit allocation table, you can see how the profit for risk assessment purposes has been allocated to each partner and their associates. Each partner has received a wage from the practice entity, along with superannuation contributions. They have also shown their share of grossed up fringe benefits and the names and other income of beneficiaries of their family trusts who have received distributions. Each partner has made personal deductible super contributions, and Alex has claimed the deduction for interest paid on a practice loan used for working capital purposes by the practice. We've also shown a benchmark salary for Alex for assessment under Factor 3, but it's not compulsory to use this factor due to the difficulty in arriving at an appropriate amount. Although blank in our work example, the last column in this table will show any unreconciled balance for each partner. For reconciliation purposes, the three amounts for profit for risk assessment purposes, profit for allocation, and total profit allocations should all be the same. And finally, there's a sample letter that you can use to send to your client explaining the guidelines and your assessment. Simply copy and paste the text from here into your outgoing email or letter. Thank you for watching this video on our Professional Profit Workbook for 2024. Don't forget, if you liked the video, please give it the thumbs up below, and don't miss any of our future videos by clicking on the subscribe button. My details are shown on the screen, so please feel free to contact me for any further information.